What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to go over Walgreens Boots Alliance Stock. This is actually a dividend stock that I sold. Now I'm going to go over the good and bad. I still like this stock, but I found a better alternative, and I'll go over that with you guys. So is it going to make a comeback? There are some positives with these guys, but I'm going to explain to you why I got rid of them. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this stock out right now. So Walgreens is sitting at $29.95. These guys are cheap as hell right now. And I still like these guys, but I sold them, and I'm going to explain to you my rationales. So they have a dividend yield of 6.41%. They're not even showing a PE ratio on Google Finance. That's a red flag. Average volume, 11.17 million. Market cap is 25.85 billion US dollars. Year range is 28.14 to 42.29. Day range is 29.82 to 30.32, and its previous close is 29.80. So I'm going to go over some recent news with these guys. So some good news. Here's on Yahoo Finance. Walgreens Boots Alliance investors are due to receive a payment of 48 cents per share on the 12th of September. This means an annual payment is 6.4% of the current stock price, which is above average for the industry. So I just want to let you know the Walgreens, per this article, their dividend is well covered by the earnings. So impressive dividend yields are good, but this doesn't matter for much of the payments that can't be sustained. Despite not generating a profit, Walgreens Boots Alliance is still paying a dividend. Along with this, it is not generating free cash flows, which raises concern of stability of this dividend. So that's one thing that you need to be aware of. Okay, according to the analyst, earnings per share should be several times higher the next year. So I'm going to go over that with you. If the dividend extends its recent trend, estimates say the dividend could reach 21%, which we will be comfortable to see continuing. We need to look over a few things. Now I'm going to explain to you, I'm going to be very thorough as to why I sold these guys, and I'm going to show you my alternative. So I'm going to go over some recent trends annually in millions US dollars. This is still a lot of money. 2016, $117,000. 2017, $1,118. 2018, $131. 2019, a dip at $120. 2020, $121. 2021, $132,509. 2022, $132,703. So there is an increase in revenue. This is attractive. Now, don't get me wrong. I still have an interest in these guys. I did sell them, but I'm going to explain to you the real big thing that irked me. And I finally had some time to really study some dividend stocks because I have not time now. And I need to have kind of like a hybrid, high yield and dividend growth stocks. But I can have a separation of that as well, because I want to have on M1 Finance high yield dividend stocks. You buy dividend growth stocks. So this one, it's in between. There's just no answer yet. And I'm going to go over another thing. So this is what I was saying when I went over the PE ratio. And there's a correlation right here. So I'm going to start in 2018. This is the past 5 years. Earnings per share went up. Then it went down. Then it went really down to negatives. And it went up, 266, 293. Then it went to 725. It went up. Now, looking at the recent articles and everything, this is probably correlated with COVID. So these guys made a lot of money. Minute Clinic, testing, 501. And now they're in the negative. So that's one thing. Their cash flow, and I'll go over that eventually when you see the when I go over the dividend trends. So it's a little bit in the negative. So if you go up right here, 2020, the earnings per share was 52 cents, an 87.94% decline in 2019. 2021, the earnings per share was 293, a 463.46 increase from 2020. 2022 earnings per share was $5.01, an increase at 70.99%. The earnings per share in the 12 months ending in May 31st, 2023 is negative 383, a 161.77% decline in the year. Then the Walgreens, again, 12 months, earnings per share in the quarterly was 14 cents, a 57.58% decline year over year. So this kind of irked me. Now I'm going to go to their dividend history, and you're going to start seeing some trends that are like wake up call, and I'm going to show that to you. So I'm going to go over the dividend trend starting in 2014. 34 cents, 2015 36 cents, 2016 38 cents, 2017 40 cents, 2018 44 cents, 2019 46 cents, 2020 47 cents, 2021 48 cents, and it's stagnant at 48 cents. Where's the hike? That's the one thing that's a problem. Their payout ratio is 47%. It's still not too bad, but it's still a little high at 47%. Dividend increases in the last 5 years is 5. Dividend growth in 5 years is 2.11%. If you bought one share, you made 192 with a 6.44% dividend yield. So looking over this growth, again, 2019 46 to 47, and it just is stagnant at 48. I don't like that. I'm going to go over a few positives with Walgreens Boots Alliance. One thing I like is that these guys sell pharmaceutical products. Physicians can e-prescribe medications. They go in the hospital, they do an outpatient, they say, what pharmacy to go to? And they say Walgreens. Okay, boom, your medication's there. Okay, so these guys make money from that. These guys make money from minute clinics. These guys make money from vaccines. I still think these guys are not bad in the long run. This is one that I still may play a little bit of options with because I never started doing option trading, but this is something I can just play around with some play money. I still like these guys, but to be honest with you, I found a better alternative, and I'll go over that right now. And my alternative is actually Kroger. And you're going to look at me and say, why Kroger? So first off, their dividend yield is 2.38%. They have a PE ratio of 13.98. Average volume 4.17 million. The market cap is 34.91 billion US dollars. Year range is 41.82 to $52. Day range is 48.34 to 48.81, and its previous close was 48.52. So why am I correlating a company that sells pharmaceutical products like Walgreens to Kroger? Let's go over that. So Kroger is like an amazing hybrid. Not only are they a huge supermarket, but they have some stuff inside of them. And this is what I like. They operate 1,500, this is on their website, 1,585 supermarket fuel centers, which are a natural addition to our one-stop shopping strategy. They also have 2,256 pharmacies located in our combination food and drug stores, provide high quality services at everyday low prices. They have a pharmacy. That's one thing that's a combination. So say like if they're hit a little bit hard from that side, okay, they're not selling enough pharmaceutical products, their supermarket will cover that. So you have a beautiful hybrid with Kroger, which they bring to the table. And this is something that is well diversified as a supermarket. So you have your, local chains and stuff that have a pharmacy. So does Kroger. And even better, Kroger offers this as well. Kroger has a little clinic. They have over 225 clinics conveniently located inside select Kroger, Fry's, JC, Dillon's, King Scoopers stores in Ohio, Kansas, Kentucky, Tennessee, Arizona, Georgia, Indiana, Virginia, and Colorado. So now you have not only the same stuff that Walgreens offers, but Kroger's way bigger and more financially stable. So I'm going to go over that. So look at the revenue trends. This is annually in millions US dollars. I'll just do the first three. So this is 115,000, 2018 123,000, 2019 121,000, a little bit of a decrease. And I'm saying annually in millions US dollars. 2020 122,000, 2021 132,000, 2022 137,000, and then in 2023 148,000. You're seeing some consistency within revenue increase. And we're going to go over earnings per share. That brings my confidence with these guys. So here's their earnings per share on a long-term basis. This is 2009. So here's 2009, it was 12 cents. And it's 348 right now. Most recent one. Data also states Kroger in 2021, the earnings per share was 327, a 60.29% increase in 2020 annual. Kroger 2022 annual earnings per share was 217, a 33.64 decline in 2021. Big deal. Kroger in 2023 annual earnings per share was 306, a 41.01% increase in 2022. Kroger earnings per share for 12 months ending in April 30th, 2023 was 348, a 20.42 increase in year over year. Kroger's earnings per share for the quarter ending April 30th, 2023 was 132, a 46.67 increase year over year. Now, going back down here, of course, an ad's in the way, nothing has ever been negative in earnings per share. The trends are a little bit down in Walgreens. Now, can Walgreens make a comeback? Absolutely. I have way more confidence in those guys versus AT&T and some of these other slouches. I mean, Walgreens, they have a reputation. I'm pretty sure they're a dividend aristocrat. They retain their dividend. They still have a lot of potential, but right now these guys are a better bang for their buck. Kroger's a better bang for their buck, and I'm going to jump to the dividend history. So I'm going to start in 2015. Quarterly dividend distribution in 2016 was 11 cents. 2016 was 12 cents. 2017 it was 13 cents. 2018 it was 14 cents. It appears to have a special dividend in 2018. Then it jumped up to 14 cents. 2019 it jumped up to 16 cents. 2020 it jumped up to 18 cents. 2021 was 21 cents, and 2022 was 26 cents. 2023 was 29 cents. Their payout ratio is 24%. The number of dividend increases in the last 5 years was 6. Dividend growth in 5 years is 15.79%. So that is huge. You bought one share, you made 104 with a 2.14% dividend yield. This dividend will probably surpass Walgreens eventually because of the dividend growth going so fast and earnings per share. These guys will, again, I'm not giving financial advice. This is for entertainment purposes only, disclaimer in the description. But these guys have had excessive dividend growth. These guys are a lot more financially stable, and their dividend growth trends are too attractive to say no to versus Walgreens' stagnant dividend growth. So this is why I chose these guys over Walgreens. So I just want to make this clear. This channel is not for financial advice, for entertainment purposes only, disclaimer in the description. Some stocks I may buy and some stocks I may sell. So do not take this as any form of financial advice. I'm just letting you know that. I'm not, if you ask me in the comment section, what should I buy? I'm not going to give you financial advice. So I'm just being very straightforward with you guys. I have lost some money in the past, and it's always a risk when you invest in dividend stocks. So make sure you seek financial advice from somebody that has a background or a certification like a financial advisor. So people like myself, this is for entertainment purposes. I enjoy showing you my dividend investing journey. Don't get me wrong, but I'm just letting you know that there may be some purchases, and I also have a disclaimer in the description that I may buy things and say, you know what, ugh, this sucks. I'm going to get rid of it. And this is what I did with Walgreens. So make sure you do your due diligence when you do your research. So, there are stocks. I'm going to tell you it would be very hard for me to get rid of Kroger. Like I said, there'd have to be something drastic to get me to get rid of companies. I usually have faith in their rich history and tradition, like Walgreens. But, when you have stocks like AT&T that cut their dividend, do all this stuff, it's just not attractive. Walgreens still has potential for a rebound, but I'm not going to sit and wait while these guys are when Kroger's at a discount. And this is just, I got to get this. I wanted to get it. So I always said to myself, I'm going to buy Kroger. So I did a little bit of sacrifice, did a little tax loss harvesting, and put my money in Walgreens. I'm sorry, put my money in Kroger instead of Walgreens. So eventually, if things look good for Walgreens, absolutely, I'm going to buy. They're cheap. They're a high yield dividend stock. If I see what I like, like things like Arbor Realty Trust that are high yield REITs or dividend stocks or NNN or anything like that, I'm going to go in if I like what I see. But right now with Walgreens, I don't like what I see. And to sum this up, Kroger they are a pharmacy. They are a minute clinic or / little clinic. And they're a hybrid. They're both of what I need or what I am looking for. They got a pharmaceutical standpoint that Walgreens has, and they have the minute clinic standpoint, and they have a ton of groceries. So they are huge hybrids. This is why I made that decision. So I hope you guys enjoyed this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future video. Again, entertainment purposes only. Love earning passive income, and I love posting videos for you guys. So make sure you seek advice from a financial advisor. I have to say this all the time, just to make it clear. So you guys take care and have a good one.